A direct cash return on your investment, regardless of what the market is doing, is why Warren Buffett adores dividends. Dividends are more than just a nice perk, so put aside any preconceived notions you may have had about them. When people are barely getting by, finding 6 monthly dividend stocks that can cover their rent might be a game changer. With an understanding of what monthly dividend stocks are, the benefits of investing in them, the selection criteria, and the 6 strong dividends that can pay your rent, you can be inspired and set sail towards a brighter, rent-free future. Oh, and did you know what? You may make a reliable monthly income of $2,000 with a much smaller investment than you might imagine. The definition of monthly dividend stocks. Knowing which stocks pay dividends every month is crucial. Unlike the more frequent quarterly or annual payouts, monthly dividend stocks pay out their dividends on a monthly basis. Companies with consistent cash flow and a promise to pay out dividends on a regular basis are the ones who issue such stocks. The benefits of buying equities that pay dividends every month are numerous. For starters, investors receive a steady stream of money on a monthly basis, which is helpful for planning and budgeting. Those who rely on dividends as a primary or secondary source of income may benefit the most from this. In addition, dividends paid monthly provide a steady stream of income that can be invested to increase wealth through the power of compounding. The growth of a portfolio can be sped up by the compounding effect, which may increase its long-term returns. Investors looking for a steady stream of passive income, such as retirees, are often drawn to monthly dividend stocks. The regular and reliable dividends diminish the need to sell shares in order to generate cash flow. The next section will discuss the criteria used to make the final cut. Dividend yield is the first metric we analyze. When compared to the stock's current price, this number indicates the potential dividend yield. But we also need to make sure the corporation has the financial wherewithal to sustain these dividend payments over time. We also take into account the firm's stability. Companies that are solidly profitable year after year have our highest interest. We can have faith in the dividends of a corporation that has proven its stability. The company's future prospects are examined last. So in addition to dividends, we're looking for equities with the potential for capital appreciation. We use these standards to select equities that we believe can provide investors with a sustainable income stream, a solid foundation, and future growth. These 6 monthly dividend stocks may be worth considering if you are willing to take on a bit more risk in exchange for larger and more regular dividend payments. The stocks are listed in order of their yield, from lowest to highest, and the required investment to generate $2,000 monthly is given at the end. The dividend yield of 4.23% makes Stag Industrial the best dividend stock for paying the mortgage. Stag Industrial is a REIT that specializes in holding industrial properties, including warehouses and light manufacturing plants. Due to a number of causes, there's been a great deal of interest in these kinds of real estate. In the first place, the epidemic has hastened the rise of online shopping, which in turn has raised the demand for storage space. The continued difficulties in the supply chain have also led to a rise in domestic production. Stag has been able to generate a steady and increasing source of rental income because of these qualities, which have led to high occupancy rates and increasing rental rates. Stag has gradually boosted its dividend payments throughout the years. The REIT's capacity to steadily increase its portfolio size has been a key factor in its expansion. Stag's portfolio has grown by more than 400 properties since its IPO a decade ago. The consequence of this growth is a portfolio of more than 500 properties, which significantly increases the company's asset diversity and revenue potential. Having a dividend that grows steadily over time makes Stag Industrial a more appealing investment. Second on our list is Realty Income, which offers a yield of 5.8%. If you're looking for a stock that pays a dividend every month, go no farther than Realty Income, which bills itself as the monthly dividend company. As of early 2022, the corporation has an impressive track record, having paid dividends on a monthly basis for nearly 600 months straight. Furthermore, Realty Income has boosted its dividend by over 100 times since its IPO in 1994, growing at a compound annual growth rate of 4.5%. More than 25 years of uninterrupted dividend growth has elevated Realty Income to the ranks of the elite dividend aristocrats. Looking ahead, Realty Income is set up to continue providing investors with an increasing monthly dividend. The business made a bold step in 2020, one when it purchased Verit, a famous REIT. Together, this strategic purchase and the roughly $6 billion in properties acquired in smaller deals should increase Realty Income's cash flow per share. The fact that Realty Income has become a dividend aristocrat speaks volumes about the company's dedication to dividend growth over the long run and should inspire confidence in investors. Third place goes to Oxford Square Capital, which has a projected dividend yield of 13.5%. As a business development organization, Oxford Square Capital Corp is in the business of aggressively seeking profitable investment possibilities across a wide range of industries, much like a hedge fund would. Oxford Square Capital makes numerous investments in various sectors. The firm favors Goldilocks companies, or those that are neither too big nor too tiny, as investment targets. These businesses are sizable and viable, with annual revenues of less than $200 million, but are too large to rely primarily on funding from regional banks. Oxford Square Capital is a business development company that uses its skills to find investment opportunities with the potential for good returns, despite the economy's volatility and uncertainty. The company's diverse strategy and emphasis on enterprises of the ideal size offer some stability and growth potential, despite the fact that all investments involve risk. In addition, you should talk to a financial planner about the tax implications. Rank 4 is Orchid Island Capital, which has a 17.3% projected dividend yield. Real Estate Investment Trust, REIT, Orchid Island Capital Incorporated, focuses on residential mortgage-backed securities, RMBS. The primary source of revenue for the firm comes from the interest earned on its investments in these securities, backed by mortgages on single-family homes. Orchid Island Capital, like other REITs, pays out dividends to its shareholders at least 90% of the time, meaning that it shares its taxable income with its investors. Those who lack the financial resources to actively engage in real estate holdings can nevertheless gain exposure to the market and its lucrative opportunities by purchasing shares of publicly traded businesses, such as Orchid Island Capital. Orchid Island Capital is a publicly traded business that invests in residential mortgage-backed securities. Shareholders of the company are eligible to receive a percentage of the company's earnings. In fifth place, with a dividend yield of 18.5%, is Armor Residential REIT. Armor Residential REIT focuses solely on government-insured mortgages for single-family homes. Debt issued by government agencies that is secured by mortgage loans with varying interest rates is included here. ARR functions as a real estate investment trust, like many other real estate equities. For the corporation to maintain its status as AREIT, it must pay out dividends equal to at least 90% of its taxable income. This requirement paves the way for substantial and consistent dividend payments. It's important to keep in mind that short-term stock performance can fluctuate due to a number of market factors. You can join our free Discord community where users support each other with investing if you found the video so far useful and are considering investing in monthly dividend stocks. To sign up, visit the link in my bio. In sixth place, with a dividend yield of 22.5%, is the San Juan Basin Royalty Trust. SJT investors shouldn't get sucked in by the stock's 22.5% prospective dividend yield without first learning about the business behind the stock, which is worth about $500 million. Since SJT is classified as a depletion trust, its partners invest in the firm's acquisition of subsurface fossil fuel reserves. Investing in SJT is profitable because of the potential profit from its oil and gas reserve. SJT investors have seen their returns balloon over the past year as low energy prices have benefited drillers. SJT also released a substantial percentage of its reserves onto the market, which increased its profits even further. Individuals indirectly support the fossil fuel sector through their investments in SJT. Extracting and selling oil and gas reserves is key to the company's business model, which in turn helps drive growth in the energy industry as a whole. Potential returns from SJT can provide stable income, allowing investors to satisfy financial responsibilities despite the energy market's volatility. So, SJT functions as a depletion trust with its value based on the finite deposits of fossil fuels. Although the company's dividend yield of 22.5% looks good at first glance, investors should keep in mind the risks linked with the ups and downs of oil prices. Furthermore, we may analyze the average returns of the 6 companies indicated and assume an equal investment in all of them to find the investment required to make $2,000 monthly. Let's start with arithmetic and determine the median return of the 6 stocks. The rates of return are 4.23%, 5.8%, 13.5%, 17.3%, 18.5%, and 22.50%, respectively. The mean can be calculated by adding up all of these percentages and then dividing the total by 6, 13.51%. Is the result of dividing 4.23% plus 5.8% plus 13.5% plus 17.5% plus 17.5%, 22.5% by 6. The average annual return on our investments is shown below. If we are to achieve our monthly goal of $2,000, we will need to create $24,000 annually. The total amount to be invested is calculated by dividing the annual income target, $24,000, by the average annual return rate, 13.51%. $177,646 is the result of dividing $24,000 by 13.51%. Therefore, we would need to invest a total of $177,646 to create a monthly dividend of $2,000. This sum accounts for the stock's average returns and guarantees that our investments will bring in the necessary funds each month.